Hello everyone, and welcome to this presentation of the three main components of a winning strategy. Welcome once again. My name is Steven Primo. I am the president and founder of Specialist Trading. And I'm sure if you don't know of us by now, you'll find out today in today's presentation that we are all about educating our viewers as well as our students and our members. That's really what our main motivation is, to supply all of our members with sound fundamental education that has stood the time, because we feel more important than any system, any trading indicator, any trading room or chat room that the trader goes to. What's more important, what you should be focusing on, is the chart in front of you and the information that we provide you with. I say this because I've been trading for nearly 4 decades. I started my trading career on the floor of the Pacific Stock Exchange, on the floor for a total of 16 years. 9 of those years I was a specialist. If you're not familiar with what a specialist does, they simply make markets in stocks. If you want to purchase or sell a particular stock, you have to go to the trader who specializes in that. Well, I did that. I made markets in about 50 stocks. I traded through the crash of 1987 while I was a specialist, and the great bull market that followed afterwards. And I left the floor in the mid to late 90s to manage money and to pursue my own trading. About 7 or 8 years ago, I teamed up with my sister site, which is Proprietary Strategies, and we formulated Specialist Trading, where all I do is educate all of my students and members the different tips and techniques and strategies that I've accumulated in my nearly 40 years of trading. So this is what our sole motivation is, to simply educate you so that you can make your own trading decisions. Now, I'm going to show you 3 great components today that you can actually add to any strategy that you're currently using, or if you're so inclined, you can actually build a strategy based off of these 3 main components. But we really feel strongly that whatever you decide to do, you will increase your odds for success tremendously in terms of consistency. But before we begin, we are required to show you this. So as always, please take a moment to view our disclaimer. I'm going to show you a lot of performance results using these 3 main components. But please remember that we can in no way guarantee that any of the results I am about to share with you will be repeated in the future. So once again, we are required to show you this. And as you are taking a brief moment to look at our disclaimer, I would also like to invite each and every one of you to follow us on Twitter. You may want to copy down our handle right there. There's our handle at SPCLSTTRADG. I post information on a daily basis, anywhere from just little tidbits of information and financial wisdom to actual signals that our strategies have generated. Now, although the information is rather limited because of the way Twitter is set up, so if you'd like to get more detailed information about myself and about what we do, ProTrader Strategies has their own Facebook page, so you can simply log on to Facebook, go to protraderstrategies.com, and you'll see a lot more information about what we do, more detailed videos about educational videos and different ways to learn and find out about ourselves, okay? So once again, lots of different ways to get information about us. Now, as I stated, our only goal is to teach and educate you. And the reason why I say this is because I've made no secret about this. When I first started trading on the floor of the Pacific Stock Exchange, I had a very difficult time. I was very lucky to have a few mentors that were really able to change my way of thinking by teaching me and exposing me to the same things that I try to teach and really incline my own traders to use, so in their own trading they can actually progress using the same things that were taught to me nearly 40 years ago. So my goal, as you see here, is to teach you, not to trade for you, not to force feed signals down your throat, but to basically teach you how to trade with the Specialist Edge, as you'll see today. Now, since our focus is on primarily teaching you, this webinar today will be given in the same kind of order as a classroom. So if you have any questions, kindly wait till the very end of today's presentation. I promise I'll get to each and every one of them, but I have a lot of great and free information to give to you that you can start using as early as tomorrow if you'd like. So I'd like to go through all the slides and then take the questions and answers at the very end. Now, if you have the most popular question, I'll just answer that right now, and that is this being recorded? Yes, it is. So if you have to leave early, or if you're having technical difficulties, you can request a link to this recording from ProTrader Strategies, okay? All right, so let's begin. Here is what you're going to be learning today. First of all, I'm going to teach you how to trade in sync. I know everyone feels or knows that they should be in sync with the market, but everyone has a different idea of how to do it. I want to show you what I feel is the simplest but most powerful way to be in sync in any market and in any time frame. Secondly, you'll learn a particular price bar pattern that you should be looking for regardless of what market you trade, regardless of what time frame. This price bar pattern should be in every setup that you have. And then finally, I'll teach you an entry technique. Now, many traders actually have a right idea about what they feel a stock or a currency pair or a future is going to do. It's just that their entry technique is faulty. I will share with you this entry technique you can start using as early as tomorrow that I really feel will increase your odds for consistency. Now, when we put these all together, we can see how they can be the formation of a brand new strategy, or you can actually add them onto your current strategy. All right, so let's go on to component number one, okay? And that is, obviously, you must trade in sync with the trend. Trading 101, everyone is taught this probably the first day they begin trading. But if everyone knows this, if this is one of the basics of trading, then why do majority of traders fail? Upwards of 80 to 90% of all traders. We feel it's because everyone has a different idea. Every educator has a different idea of what the trend is. Some people feel it's a pattern that you must be looking for higher highs and higher lows and vice versa for downtrends. Or maybe it's specific indicators that need to cross exactly at the same time. Or maybe it's having two different time frames, say a daily looking at an hourly time frame. They must be in sync with each other. Okay, everyone has a different idea. I'm going to show you what I feel is the most powerful and the simplest way to be in sync with the overall trend, regardless of what market, regardless of what time frame. This was taught to me roughly 40 years ago, and it has really improved my trading just unbelievably well. In fact, I think it's one of the main things that has sustained me for nearly 40 years. Now, as you see here, we have this generic chart, and I did this on purpose because I didn't want to think that it only works on a specific time frame or a specific market. But as we see here at this generic chart, we see here that someone looking at this would say, well, Steve, there's actually no trend here. In fact, we're just basically in a sideways market. We're going lower, then back up, then back down again. So my teacher, the website I go to, always tells me to stay away from these markets. So I'm not going to do anything because there actually is no trend here. Okay, and this is why most traders fail, because in all actuality, there is a trend here. But how do we find it? All you have to do is add a simple indicator. It doesn't cost anything. In fact, you practically all have it on your charting software package. It's a 50-period simple moving average. And what you do is you ask yourself, where is price in relation to that 50-period moving average? If the majority of bars are above, well, then the overall average is up. And if the overall average is up, as it is here in this particular example, well, that means that you're only going to be looking for buy setups. In other words, you will never sell anything if you are above the 50-period moving average. I know a lot of you may be thinking, well, wait a minute, that's not the way I was taught. I thought we were supposed to sell something when it's overbought or buy something when it's oversold. That's why the majority of traders fail. Simply use this simple technique, and I can almost guarantee you will improve your odds tremendously. All right, so if price is above the 50, the only thing you will be doing is buying. You will never be selling. So conversely, if we look at this generic chart right here, it doesn't matter what time frame or what market, we see once again that someone could say, well, Steve, there's no trend. Once again, we're in a sideways market here. I better stay out of this because this is where you get whipsawed. Not true. All you have to do is add the 50-period moving average and ask yourself, where is price in relation to that? Price is obviously below, as you can see. So what is that telling us? The market, not some convoluted indicator, not some guy in a chat room, but the market is telling us that the overall trend is down. Therefore, if the overall trend is down, you're only going to be a seller. You're not going to be looking for any buy setups, any buy signals. I don't care if someone on TV says this is the best buy, it's gone so low you have to buy it. If you are below the 50-period moving average, don't buy it, because over time, you will not be consistent. It'll be just like trading, or I should say gambling at the slot machines, okay? It's just probably the worst odds in anyone's favor of any gaming you have in any casinos is the slot machines. And every once in a while, the lights and whistles will go off, and they'll give you this false sense of security that you're winning. So you'll continue to stay there, but ultimately it's designed that way so that you'll stay there and give everything back. That's the same way with trying to buy below the 50 period and sell above it. Every once in a while, you may have a good trade, but ask yourself over time, how's it working for you? Do you have tons and tons of winners that are making you tons of money? I don't think so. I can almost promise you it's probably the opposite. All right, so that's component number one. Now you know what the overall trend is. Component number two, we're going to look for bars that close either in the top or bottom 25% of their range. All right, so what exactly does that mean? People get confused with this. Well, if we have, once again, a generic bar here, and it absolutely makes no difference if this were a 5-minute bar, a daily bar, or a monthly bar. Makes no difference, okay? What we want to do is divide this particular bar by 4 separate but equal parts. Okay? Now, each one of those is a quarter. If you close in the top 25%, as we did here, well, the market is telling you, not someone in a chat room, but the market, the most important thing, and in my opinion, the only thing you should be listening to, the market is telling you that that's an indication to buy, and the most likely prices are going to continue upwards. So if you have this type of bar closing in the top 25% and you are above the 50 period, well, that's really golden. You have really consistent odds in your favor. Now, as we look here in this chart, we are above the 50 period moving average. This is the same chart we looked at. And these are the 3 bars that closed in the top 25% of the range. As you can see, it does not make any difference if we're looking at candlesticks, range bars, if we're looking at open, high, low, close bars. It's the same thing. Just take the top of the wick to the bottom of the wick, divide by 4, and if you close in that top 25% and you're above the 50, those are high probability odds that you're most likely going to continue in the same direction. Conversely, if we have a bar here closed near its bottom, you simply divide by 4 separate but equal parts. You have 4 quarters, and if you close in the bottom 25%, that bottom quarter, and you are below the 50 period moving average, the odds are in your favor that that's an indication to sell and that you will most likely continue to go lower. Why? Because the market is telling you it's going lower. It's trying to give you a tremendous clue as to which direction it wants to head. Now, what would you rather listen to? Some supposed market guru on TV or the market? I would rather listen to the market. So this is what the market's telling you. It's giving you a clue as to what it wants to do. As we see here, we are below the 50 period moving average in that same chart we looked at earlier, and this bar closed in its bottom 25%. Okay, now, component number 3, which is simply an entry technique. And what we want to do is enter upon the confirmation of trend. So what does this mean? I thought we already knew what the overall trend was. Here's what this means. And you may want to copy this down, but once again, don't worry. This is being recorded. You can request a link to this recording from Pro Trader Strategies. Simply email them or you can call them directly and they'll send you a link. Here's what the confirmation is, confirmation method. You're going to buy if price trades 1 to 5 ticks above the bar that closed in the top 25% of its range. So that's it. In other words, let's say your signal, everything comes together, all right, you're above the 50 period moving average. Let's say you follow the news or something based on your strategy, and you have that bar that closes in the top 25%. You don't want to buy at the market. You want to wait to see that price trades 1 to 5 ticks above that bar that closed in the top quarter of its range. Why? Because it's giving you confirmation that it's most likely headed higher. So as we look at these 3 bars that close in the top 25% of this range, we want to buy in this first example right here. All right. Now, as you can see, most likely we want to buy on the next bar. This gives us more confirmation that we're going up right away. So as you can see on the very next bar right here, right next to it, we never traded above there. So most likely we would discard this setup and just wait for another one. And it happened 2 bars later. Here's our next setup, okay? So we're not long anything yet. And there's our entry, because on the next bar we traded 1 to 5 ticks above, okay? A tick is simply a cent if you're looking at a stock. So if the stock high is 50, 50.01 is 1 tick, 50.02 is 2 ticks. Now, we don't have to close up there. As you notice, we did not close there. All we did was trade there. That's all that's required. But as long as we traded there, that's your entry, all right? And as you can see, you went up higher for the next 5 bars, all right? Now, it doesn't look like a lot, but it's all relative. For all you know, these are monthly bars, and that just went up maybe 40 or 50 points. As we can see here on this last example, well, the same thing applies. We close above the 50 in the top 25%, and here's where we want to buy. Let's see if it trades there on the next bar. Remember, as I just said, let's see if it trades there. does not have to close there, only has to trade there. And as you can see, it traded there and then closed lower. That's okay. We still entered into the trade, and this one worked much, much better. Now, did we do this because we looked at the news, or we were following volume, or seeing what the institutions were doing? Absolutely not. Everything you need to know is right in front of you in the chart. There's no need to complicate your trading. Let's look at the confirmation if we wanted to go short. It's the same rule, we just turn it upside down. Now we're going to sell if price trades 1 to 5 ticks below the bar that closed in the bottom 25% of its range. Okay? So in other words, we are below the 50 period. We have a bar that closes in its bottom 25% of its range. We're not going to simply sell at the market, because what if whatever we're trading goes straight up the next day? We want to confirm that it's going lower, so we want to see it trade 1 to 5 ticks below that bar. So as you can see, here is the example we had before. We're below the 50 period moving average. We close in the bottom 25%, and here's where we want to go short. So let's see if we traded there. Notice we don't have to close there once again. We only have to trade there intra-bar. So the very next day, once again, we traded there and closed higher. Now this is where students get scared. They say, well, Steve, it didn't close lower. It's okay. It doesn't matter, because you're entered anyway just because it traded there. Now, had you exited and said, well, Steve, that kind of scares me. I got short, and then it went all the way back up, so I'm getting out of this trade. Once again, you're following things that you're not listening to the market, because the market is telling you it's going lower, and had you exited the trade with a small loss, well, you would have missed all of this. Once again, the reason why most traders fail is because they're out of sync with the overall trend. And so traders say, well, how do I find the overall trend? Just add a 50 period moving average. Absolutely doesn't cost anything. It's on just every charting software package you can think of. If price is below, you're going to be selling. If price is above, you're going to be buying. Why? Because you'll be in sync with the overall trend. Then traders say, well, what do I look for an indication? Well, if you get a sell signal, don't sell until you find a bar that closes in its bottom 25%. If it's a buy signal and you're above the 50, don't buy until it closes in the top 25%. All right? And someone would say, well, then do I just sell or buy at the market? No, use the confirmation method. Wait for it to trade 1 to 5 ticks below that bar. It's up to you. Some of our traders like to use only 1 tick. Others like a little bit more confirmation and say, well, Steve, I need to see it trade at least 5 ticks. It's up to you. We're not teaching systems here. We don't tell traders how to trade. We just give you information and help you in designing a perfect method that fits and meets your needs. Okay, now, the beauty of all these three components here is that they make up one of our most consistent strategies. That's strategy number 4. Okay? I'm going to show you some actual signals that are based off of these 3 components. In fact, strategy number 4 has a total of 5 rules. I just gave you 3 of them. Let's start by looking at some stocks, okay? Some recent examples of how strategy number 4 with these very same 3 components I just shared with you, I just revealed, apply, and how you could have applied them to some recent stock examples. This is CVX, okay? This was in April coming into May. Someone once again would say, well, Steve, the guy in the chat room I talked to says CVX is a non-issue here. We shouldn't do anything. It's just a sideways market. We need more information. Wait till the earnings come out. Once again, you're waiting for things that are outside of the market. We don't rely on those things. Most of the time, if you rely on that, you'll miss something. Just learn how to listen to the market. How do we listen to the market? Well, the first thing is component number 1. You add a 50-period moving average. And what's the market telling you? It's telling you the overall trend is up. So right off the bat, guess what? You just know that the overall trend is up. And in our opinion, you've eliminated half of your losses because you're on the right side of the market. Okay? Now, let's say you like this stock based off your analysis. Could be based off news, based off earnings, whatever you want it to be. It could be based off the tides of the ocean. We don't care. Don't buy until you find a bar that closes in its top 25%. Now, according to strategy number 4 here, we closed in our top 25%, and it met all the other rules of the strategy, which I'm sorry I can't divulge here right now because it wouldn't be fair to the members that purchased this. But a valid strategy number 4 buy signal was generated on the 6th of April. All right? But we just can't buy at the market. We have to apply component number 3, meaning that we won't go long until we trade 1 to 5 ticks above this bar. So the very next bar, we just barely traded above it. So we entered long, okay, on the 7th of April. And coming into May, the stock went up 9 points in 3 weeks, okay, based off of a pattern that we look for with strategy number 4. Now, I just gave you 3 of the rules. 2 of the rules I couldn't disclose, but 3 of them are right there. Okay, we don't rely on any news. We don't rely on any Fibonacci. We don't rely on anything that what the institutions are doing or what volumes is doing. We don't care about those things. We're just looking at a specific pattern because everything we need to know is in the chart in front of us. How about Costco? Okay, well, this was coming into May. Someone looking at this would say, well, Steve, the chat room I go to says there's really good support here. Okay, this comes to a really good support level, and we've kind of hit this level, and it looks like we're bouncing off. So I think I'm going to be a buyer here. If we come just a little bit lower, I'm going to pick up some cheap prices here for Costco. In fact, all the indicators are tremendously oversold. So if we go a little bit lower, I'm going to be a big buyer here. All right. Once again, this is the way most traders trade. Myself included. I'm saying this from firsthand experience. This is the way I used to trade my first year or 2 on the floor. This is also why I couldn't make a dime my first year or 2 on the floor. My mentors taught me, they said, Steve, discard all that information. It's pretty much useless because there's no consistency in that. Just add the first component, the 50-period moving average. Now, this is a little bit more advanced trade because we're oscillating below, above, but as we come later on, the majority of the bars are below. In fact, the last week. That's all we need. We don't need a ton of bars below. We just need about 3 to 5 or 10 bars, okay? In this example, there's only 6 or 7 bars that close below. That's enough. That's telling us the overall trend is down. So are we going to look for a buy signal in Costco here and look for support? Absolutely not. We're going to be a seller. So as you can see here, there's a bar that closes in its bottom 25%. The second clue the market is giving us. Now, according to all the rules of strategy number 4, this generated a valid sell signal on the 28th of April. But we just can't sell at the market. We have to apply our confirmation method, meaning that we will go short if we trade 1 to 5 ticks below. As you can see, we actually gapped lower, so you wouldn't have been able to sell right here. You would have actually sold here, or if it bounced up a little on the uptick. Either way, you could have applied options to this, could have gone short, could have purchased the puts or some type of option strategy to go short. And as you can see, the stock dropped 10 points in the next 3 weeks. Obviously, there was some news or something that was causing it to go down, but what happened to the so-called support? There was no support. The market was trying to tell you weeks in advance, the overall trend is down. Now, this is a great example to show you how well this works, not only on expensive stocks, but very inexpensive stocks as well. So it doesn't matter if you say, well, Steve, I can't trade these high flyers. That's okay. Here's a $2, $3 stock here. The same principles apply. We're above the 50-period moving average, so the overall trend is up. We have a bar here that closed in its top 25%, and it meets the remaining rules of the strategy. So strategy number 4 generated a buy signal on the 12th of April. We still can't go long with the market, even if it's just a $2 stock. We have to purchase if it trades above. And as you can see, it did on the next bar. And the stock went up 1.5 points in 3 weeks. Doesn't seem like a lot, but that's 50%. If you're looking at percentage points, I mean, that's you made half your money in 3 weeks. Okay, the stock rose 50% or half its value in just 3 weeks. Now we can also go to expensive stocks. Here's a $200, $300 stock. Now this is an older chart of LinkedIn because I know some recent things just happened in the stock. But as we look here at this older chart coming into the beginning of the year, we're only looking at roughly 7 bars. That's all the information we need. Why? Because we have the 50-period moving average, and ask yourself, where is price in relation to that 50-period moving average? Is it above or below? It's below. So just off of the 7 bars, we know that the overall trend is down. Until we get 3 to 5 bars closing above, we're not going to be a buyer of LinkedIn. We're only going to be a seller. So as you can see here, we have a bar that closes in its bottom 25%. It meets all of the rules of strategy number 4. So that's component number 2. And component number 3 is this is a valid sell signal. We can only sell if we trade 1 to 5 ticks below. So that's component number 3. And we could have gone short either, with the stock if we wanted to. I know that's a very expensive stock. Most likely we would have purchased puts. And as you can see, In 2 months, the stock fell 120 points, okay? Once again, obviously, some news came out here in February where the stock gapped down tremendously. Did we know about that? Absolutely not. But the market was telling us 2 months in advance to sell because it was below the 50. To see how when we learn to listen to the market, it's a lot simpler, it's a lot easier to interpret, and it's a lot cheaper. You don't have to spend money going to chat rooms or buying this convoluted indicators or tremendous price systems. It's cheap. It's just free. You can find out for yourself and go and experiment on some stocks you've been trading. Now you can also apply this to ETFs. Here's IWM, that's the ETF on the Russell 2000 index. This was on the 20th, this was about 3 weeks ago. As you can see, a little bit more advanced. The majority of the bars are above the 50. We had 1, 2 closed below, but still not enough to tell us that we're still below. And we have a bar that closes in the top 25%. It closes above the 50. And even though this is a more advanced style of trade because it opens below but closes above, as long as your entry is above the 50, that's a valid signal. Now, if we were going short and the majority bars were above, as long as our entry would be below the 50, that's still valid. A little bit more advanced way to trade. We wouldn't expect our beginners to trade this way, but a lot of our experienced traders take signals like this. Now, this was on the 20th, so if you didn't want to trade IWM, you could use this as a market timing tool. So if there's a buy signal in the Russell 2000 index, don't you think that the market most likely will be going higher? So you could actually use this to give you the confidence to maybe buy that stock you were interested in, or perhaps buy some options. Now this was a buy signal generated on the 20th, and as you can see, the stock went up 8 points in the next 2 weeks, which basically was the same as many hundreds of points in the Dow. You can also apply this to commodities. Here's crude oil, okay? This is crude oil in April. Now, obviously, someone looking at this will say, well, Steve, the trend is down, obviously. I mean, we're going lower with crude oil. Well, not really. The majority of the bars are closing above the 50 period moving average. Nothing changes because we're looking at a commodity. Everything is still the same. We only have 2 bars closing below, and then we immediately close back above. So the overall trend is still up. Now, we have a bar that closes in the top 25%. And all the other rules are generated and they're all met. So this is a valid strategy number 4 signal. If we want to apply component number 3, we're going to purchase 1 tick above. And as you can see, crude oil has gone up 12 points in the next 2 months coming into this last week of June. All right. We had no idea crude oil was going up this high. We don't watch anything fundamentally. We don't look at economic news. We don't follow the gas blogs or what's going on with crude oil blogs. We just look at the chart. It's all here. Don't overcomplicate your trading. For some reason, we've been taught that the more indicators, the more news we follow, the more blogs or chat rooms we go to, that we're going to be a more successful trader. In my 40 years, I've learned that it's actually the opposite. Those things keep you from being successful. My mentors taught me that the more you simplify your trading by discarding all these things that they called useless noise, that's what will make you more consistent. Now, the beauty of strategy number 4 is mainly that if you happen to miss the very first setup, many times it generates other ones. So as you can see, another setup was generated in the middle of April, I should say. Another one was generated about a month ago in May, and then one was generated just last week to go along. All right, let's look at the E-mini S&P, because I know not everyone trades stocks. A lot of people like to trade futures. So let's look at the E-mini S&P, and I want to first show you this chart. This is an older chart here, but I'm showing you this for purposes, for educational purposes, and also to show you that nothing works 100% of the time. I'm not going to sit here and just say, well, I cherry-picked all the winning setups because this never loses. That's not true. You will get small losses from time to time, but the beauty of this strategy and all of our techniques of specialist trading is their consistency. Their consistency meaning that many times if you have a few small losses, you'll be able to make it back right away, okay, and recoup those losses. Here's a perfect example, last August, okay? Now this is a more advanced trade because as you can see here, the market is oscillating above and below the 50 period moving average. So there's no real clear-cut trend. But strategy number 4 still can generate valid signals as long as your entry for this signal is in line with the 50 period moving average. Therefore, a buy signal was generated on the 10th of August last year. All right. Now, had you purchased that right here on the next day, you would have most likely experienced a small loss. Now, rather than give up and say, hey, this stuff doesn't work, that's my first trade, and boy, once again, this stuff is just like everything else. I'm not going to trade this anymore. It's not true because remember, we rely on consistency. 2 steps forward, 1 step back. Okay? In other words, a couple of winners, small loss, another couple of winners, 2 or 3 winners, 1 or 2 small losses, 1 or 2 winners, 2 steps forward, 1 step back. So, as you can see later on in that month, we were still oscillating above and below the 50-period moving average. But then a sell signal was generated a couple of weeks later on the 19th of August, okay? Now this was a valid sell signal generated because it met all the rules of strategy number 4, and at the same time, it closed below the 50-period moving average. So even though it was a more advanced type of strategy, we wouldn't recommend our beginners to trade this, it still is a valid setup. And remember, strategy number 4 uses and applies the 3 main components I just shared with you and taught with you. All right. So in this case, even though the majority of the bars aren't either above or below the 50, our entry is below the 50, as you can see here. So that's telling us the overall trend is down. We have a bar that closes in the bottom 25%, and we are going to be entering using the 3rd component, which is right here. This is our entry if it trades 1 or 2 ticks below there. All right. Now, does anyone remember what happened last August? Well, we went short, the market fell out of bed, and then this happened 2 days later. There was all these rumors about China and terrible things happening with their economy. There was all these rumors about how the high-speed frequency traders were taking control of the market with their programs, and the market fell out of bed. In fact, it dropped 230 points, or roughly about $12,000 per contract in just 3 days. Now, a lot of traders were, on the wrong side. Why? Because they thought, well, this is too oversold. There's no way you can go any lower. But as you can see here, in fact, the markets were down over 1,000 points intraday in one of these days here in August. Now, most traders love to play the victim game. They love to say, well, there's no way, I'm a little trader. I can't compete with these large institutions. I can't compete with these high-frequency traders. I can't compete with all the big movers and shakers. If you use these simple rules we teach you, the rules I taught you today, the 3 components, and you're on the right side of the 50-period moving average, there's no way you should have lost money at all. In fact, you should have been making money. First of all, had you not known about these 3 components and not taken a signal, by this day, at least by the 2nd day, you would have known you were below the 50. You shouldn't be long, okay? So this is just one way to look at it. Then you can apply it to your individual stock. Let's say you were in a stock or whatever. If you were below the 50, you shouldn't be in it anyway. So do you see how these simple components really help you save money and get you on the right side? Now that's an older example. Let's look at an example here a few months ago on a 60-minute chart. Once again, a little bit more advanced because we have more advanced traders intraday trading. We're oscillating above, below, but we have here a strong bar that closes above the 50, and it closes in the top 25% of its range. So strategy number 4, which encompasses the 3 components I just revealed with you, generated a buy signal on the 12th of April. All right. Once again, the 3rd component is we only buy if we trade 1 to 3 ticks above, which it did. And as you can see, look what happened to the market on this hourly chart. That's 50 points or $2,500 per contract in 1 week. All right. Now that's in an hourly time frame. And if you missed that, there's a lot more signals that were generated later on. Let's go to an even smaller time frame. This was just a few weeks ago. This was on a 5-minute chart. As you can see, on the first day, we are above the 50-period moving average. But then on the 2nd day, we go below. Well, that's fine. When we're above, we're just going to be a buyer. As you can see here, we're above, and these are all the buy signals. Had you just taken the first one, well, that's 10 points in your favor that the market went up, $500 for the day per single contract. Now, the next day, when the majority of bars were below the 50, well, guess what? The trend is down. Now you're a seller. It's this simple. There's nothing you have to read. There's nothing you have to figure out what's going on in the news. If you're below the 50, you're going to sell. And now if you had taken the very first signal, well, that's 14 points you had in your favor to the downside. So 24 points in 2 days. Once again, just to share with you that we're not cherry picking, let me show you something that happened yesterday, okay, coming into today. This is a 30-minute chart of the E-mini futures. Where is price on this 30-minute chart in relation to the 50-period moving average? Price is below, right? So were we going to be a buyer in this particular time frame? Absolutely not. So we don't care what's going on fundamentally. We don't care if there's news coming out. We don't care what's going on, on some blog. The market is telling us it's most likely going lower. That's the only thing we need to know. If it's going lower, the overall trend is down, are we going to be a buyer? No, we're going to be a seller. So we look for sell setups. And guess what? Here's a bar that closes in the bottom 25% of its range. It meets all of the rules of strategy number 4. And so it generates a sell signal. All right? But we can't go short until it trades 1 or 2 ticks below. And guess what? Yesterday, it did. You would have entered short, and if you wanted to carry over this position into today, this morning, to the first couple of hours of today, that's 30 points in your favor. Now, a lot of people have been losing money these last couple of days wondering, boy, when's the market going to stop? I keep buying and it goes lower and lower. Why would you buy if you're below the 50-period moving average? Just go with it. Why would you swim upstream if if the current is going down? Why would you go against the current? Swim with the current at your back. It's a lot easier to make money. And lastly, we can apply this to the Forex markets. There could be some currency pair traders out there. So let's look at a weekly chart. We've just shown you 10-minute charts, 30-minute charts, daily charts. Let's look at a weekly chart of the currency pair, the Canadian dollar. Once again, rule number 1, component number 1. Where is price in relation to the 50-period moving average? Well, that little green line there at the bottom is the 50. So obviously price is above. So even though price is headed lower, we're not going to sell. We're not going to be a seller at all. We're only going to be a buyer. And guess what? This last bar here meets component number 2. We close in the top 25% of its range. All right? So those are the first 2 components I just taught you today. Now, all of the rules of strategy number 4 were met. The remaining 2 rules I can't divulge to you. So a valid signal was generated last June. Okay? Now, we could only buy if we traded above it, 1 or 2 pips above, which we did coming into June of last year, and 1,100 pips in roughly about 6 months. Okay, that's roughly about $11,000 per contract. We don't follow the Canadian dollar. We don't look at economic worldly news. We don't care about that. All we do is listen to the market. All right, so let's recap before we go into questions and answers. Here's what you learned today. Here's what I taught you. The 3 main components of a winning, consistent strategy. Remember, you can apply these to any strategy you currently trade with, and I really feel it will increase your odds for success. Or if you're so inclined, you can actually build a strategy based off of these 3 main components, okay? Now, the first component is you must trade in sync with the market. Everyone knows this, but if everyone knows this, why do the majority of traders fail? It's because you're basing them off of faulty techniques for telling you what the trend is. The simplest and most powerful technique I know of was one that was taught to me nearly 40 years ago. Just apply the 50-period moving average. If price is above, the market, not someone else or some indicator, but the market is telling you the overall trend is up. Therefore, you don't want to be a seller. You're only going to be looking for buy signals if you are above the 50. If price is below, the market is telling you the overall trend is down. Therefore, if the current is going lower, you want to be a seller. You want to swim with the current at your back. You're not going to buy if the overall trend is down. I know this may be contrary to everything you've ever been taught. Trust me, it was to me when it was first explained to me. I couldn't believe it. But this has been one of the main things that has sustained me going nearly 40 years in my trading, because I've been able to be on the right side of the market more often than not. It's not going to work 100% of the time, but remember, just like the casinos, those things are designed to make you feel that you will have a winner every once in a while. And if you trade by buying below the 50 and by selling above the 50, sure, every once in a while you'll get a winner, just like the slot machine, but over time you won't have anything to show for it. We go on to component number 2. Look for that price bar pattern that closes either in the top 25% of its range, that's if you're above the 50, or if you're below the 50, in the bottom 25% of its range. Why? Well, because it's a great clue that's coming from the source, from the market you're trading. It's telling you that most likely you're going to continue in that same direction. So what a great clue to have in your favor. What a great edge. You don't have to worry if some guy on TV is telling you the right information. He hasn't been right in a long time, or hopefully he's going to be right this time. You don't have to worry about that. Just listen to the market. And then lastly, you can apply this entry technique, our confirmation method. Don't just simply buy at the market, because oftentimes that may be okay, but oftentimes, how many times have you bought at the market and it goes the exactly opposite direction? Wait for confirmation. wait for it to trade at least 1 to 5 ticks above the previous bar's high. Or if you're selling, 1 to 5 ticks below the previous bar's low. Okay? I really feel confident enough that if you add these 3 techniques, you will increase your odds for success tremendously. Now, in closing here, I'd like to ask you something and answer it honestly. Do you think any of these edges could have helped your trading this past year? Remember, these 3 components make up one of our best strategies, strategy number 4. Okay? But do you think if you could have applied any of these components, they could have helped you? I just want to show you one last example here, thinking that it could. Let's take component number 1 and apply it to news. A lot of people always tell me, well, Steve, the news, this stuff may be good, but, when we're really trading, the news supersedes everything. I mean, these guys are too big, and the news, I could follow this stuff, and if an announcement comes out which is contrary to that, it's going to ruin everything. Well, I'm not going to say that this works 100% of the time. Remember, 2 steps forward, 1 step back. But in my nearly 40 years of applying these components, I've seen that oftentimes they get you in the right side prior to a news announcement. Here's a perfect example with LinkedIn. As we all saw this week, Microsoft offered to buy LinkedIn for $26.2 billion. Okay, this news was announced on Monday, just a few days ago. Okay, now the stock, as you can see, prior to that announcement, really wasn't doing anything, kind of heading higher, but just basically in a kind of a slowly ascending range. But nothing happened. It gave no clear clue that it was going higher. In fact, as you can see on this last day here in June, it had a really sharp down day. Okay, closed near its bottom of its range. Now, someone looking at this would say, Steve, why would I be interested in this stock? There's no real news. There's no information. The volume hasn't shown me anything. There's no real support. The institutions aren't doing anything. So I'm kind of staying away from this because I have no clue what the trend is. Once again, not true. Where is price in relation to the 50-period moving average? This entire time, for the past month or two, price has been above the 50-period. So we've known in advance that the overall trend is up. Now, just looking at this, there were a number of buy examples here you could have taken advantage of. A couple of strategy 4 examples here, some other of our strategies where you could have gone long months in advance of this announcement. And when the announcement finally came out, that could have been 70 points in your favor. Now, some of our students were lucky enough to take these signals that were generated, but they used the very first component, and that is they asked themselves, where is price in relation to the 50-period moving average? Right here, the market was giving you clues. LinkedIn was screaming that it was going higher, that you should at least never short this. And had you shorted it, you would have lost a lot of money. But knowing this one simple rule, component number 1, you would have been on the right side. So here's our special attendee discount we're having for all the people that attended today. We're going to be offering you our Secrets of a Stock Exchange Specialist training sessions. What this is, it's a 3-hour video of training techniques, many more high probability trading edges, plus a full strategy. As you notice today, I didn't give you the rules to a complete strategy. I just gave you 3 of the rules, 3 components to one of our most consistent strategies. Well, guess what? I'm giving you the complete rules to another strategy, which is one of our most consistent pullback strategies, and that's strategy number 1. In fact, let me share with you some of the recent strategy number 1 signals, which you will be privy to, and you'll know all the rules on how to generate these signals. As we look here, just about a month ago in IFF, once again, it looks as if this stock is heading lower. Well, according to all the rules of strategy number 1, it generated a buy signal, and you could have gone long, and in just a couple of days, you would have had a 10-point profit. So all the members who have already purchased our strategy number 1 course could have taken advantage of that. Now, strategy number 1 also works to the downside. If we look at the stock PRGO in April, someone could say, well, it looks like we're building a base here. It looks like we may be going higher. Well, according to strategy number 1, we were in a downtrend, and it generated a sell signal on the 20th, and the stock quickly dropped 35 points in just another couple of weeks. We can also apply this to futures. Here's a 10-minute chart of the E-mini going back about 3 weeks ago. Now, on this 10-minute time frame, we had a couple of buy signals generated on this day for a small gain, but if you were lucky enough to hold on and carry positions over to the next day, which many of our members do, well, you could have taken advantage of a really nice rally that happened the very next day and generated a 25-point gain, all right? And lastly, strategy number 1 also works the exact same rules, nothing changes on the currency pairs. Here's a chart of the dollar yen. As you can see here, someone could say, boy, this stock, or I should say this currency pair is rising. This is something I should be purchasing probably because we're in a nice uptrend, but according to strategy number 1, it generated a sell signal on the 28th of March, and the dollar yen quickly fell 500 pips in the next couple of weeks, roughly $5,000 per contract. But it didn't end there, okay? The currency pair started to rally. A lot of people thought, well, that was the bottom, let's buy. But once again, strategy number 1 generated a sell signal at the end of April. It dropped another 450 pips. So all the rules work the exact same way, regardless if you're looking at a 10-minute time frame of the E-mini future, a daily chart of the dollar yen, or a daily or weekly chart of stocks. And we're giving you all the complete rules, plus more high probability trading edges. We talk about the difference between a system and a strategy. I talk about what indicators to use, which ones not to use. And the beauty of this is 3 hours of trading techniques plus a full strategy. Now, the reason this is a 3-hour video is because I would say about 4 years ago, I was asked to speak at a conference in Denver, and I was the featured speaker there, and many people came to see me. They paid good money to see me, and the people who put on the conference videotaped it for me. Well, this is the actual video of me speaking at the seminar. So it's jam-packed with information. We provide you with this video. It's a link to the video, so you don't have to wait for anything to be shipped or mailed to you. You have instant access to this. And there's so much information, plus all the rules in the strategy provided for you, where to enter, where to exit, where to place your stop. Now, on Pro Trader Strategies, because there's so much information in this 3-hour video course, they have this Secrets of a Stock Exchange Specialist package offered for close to $1,000. But for all of our attendees today, we've dropped the price down to, in fact, we've not dropped, we've slashed it down to $37. But this is only for a limited time only, for the next, I believe, 48 hours. So if you want to take advantage of all these high probability techniques, similar to what I taught you today, but entirely different, as well as the complete rules to a full-fledged strategy, as I just showed you right there, take advantage of this deep discounted $37 offer, because it's only going to be for the next couple of days before it goes back up to $1,000. Now, here's how to take advantage of that. Once again, contact Pro Trader Strategies. They are in charge of all the marketing and promotion of my courses, and you can email them at trading@protraderstrategies.com. You can call them directly at area code 310-598-67, or the simplest and easiest thing to do is simply click on the link, and it will take you to the $37 sign-up page. Now, as you can see, that's the link at the very bottom of this page, but it's not live. You would have to copy and paste that onto your browser. But if you go onto the chat box on the far right-hand corner of the Go to Webinar page, you'll see that they have posted the live link. You can simply click that on, and it will take you directly to the $37 sign-up page. So I'm going to leave all this information up here. Remember, once again, click on that link in the chat box, because this is only going to last for a couple of days before it goes back to $1,000. And I'll leave this information here once again as I open up the question and answer box. And thank you so much for waiting if you happen to have any questions. PW asks, what is strategy number 4? What is it based off of? Well, first of all, I can't give you the full rules because it's you know, many people have paid hundreds of dollars for strategy number 4. All I can say is it is probably our most consistent strategy to date at Specialist Trading, and it uses the 3 components which I just shared with you right now. Okay. Now, strategy number 1 is another great strategy which comes in this $37 deal. It's probably our second best strategy in terms of consistency, and it's entirely based off of entirely different rules. But we're still using those 3 components, but we're also looking for a specific pattern within an indicator. So it's based off of something entirely different rules altogether, but another great strategy. Now, strategy number 4 costs hundreds of dollars because of its consistency. Strategy number 1 is a great strategy. You can get that plus all the information provided in the 3-hour video seminar for only $37. So I would take advantage of that as soon as possible. Al asks, do all entries have to be on the next bar? That's a good question, Al. Well, firstly, the basic format is for yes, because you want to see if they trade above or below. But as you begin to be more skilled and more experienced in our methods and in the format, you're free to edit and alter the strategy as you see fit. In other words, you know, as long as you keep the basic format in place, you can, you know, fine tune and tweak things here and there. So many of our advanced traders like to say, you know what, I'm not going to just wait and have it happen on the next day. Maybe I'll wait 2 days. Or maybe they'll say, you know what, I don't have to wait for the confirmation. I'll just enter because I feel confident enough to enter at the close. It's up to you. But remember, if you do happen to alter and change things a little bit, you're responsible for your own results, okay? Let's see, Manu asks, does it work on U.S. bonds too? Yes, it does. All of our techniques and methods work on commodities, futures, stocks, currency pairs. We have many traders who only use this for bonds, for trading candlesticks on currency pairs. We have many that only trade it on weekly and monthly bars. We also have many members that apply our strategies but don't actually trade stocks or futures. They trade options. And so whenever a signal is generated, rather than buy the stock or the future or the currency pair, they just purchase an option or an option strategy. And that's fine. There's nothing wrong with that. So you don't have to be a stock trader or a currency pair trader to apply these if you trade options. Just once a signal is generated, use the tradable unit of your choice to enter into the trade. Okay? So I hope that answers your question. We have people that trade this on gold, on soybeans, on bonds, and on crude oil. James asks, if the bar following the setup bar does not trade above 1 or 3 to 3 ticks, do you negate the trade? Well, once again, James, that's the standard basic format. Good question. It's the basic format which we want all of our beginning traders to follow. Once you get enough experience under your belt, and you know how the strategy works, you have a better understanding of it, and you understand the process behind the strategy, then you're free to tweak it a little bit and say, well, you know what, maybe I'll wait, I'll give it 2 days. But we want most of our traders to use that standard format. And trust me, there are a number of setups happening over and over again, so that if it doesn't happen on the very next bar, most likely you'll look for another market, or within the same market you're trading, you'll see another one happen very soon. Okay. Jagdish says, I missed the first half hour today. Do you have recording? Yes, we do. You simply go to Pro Trader Strategies. You'll see there they have their email address and phone number there. You can request a link. I believe they may be sending a link to everyone anyway. But remember, if you want to take advantage of this great offer, $37, I can almost guarantee that most of you, if you were trading today, spent more than that amount today just in commission costs, because that $37 is nothing. You can't even go out to dinner for less than $100 these days for two. So for $37, you're getting a great deal. This is 3 hours. And remember, it's not something you have to wait, not a disc that has to be mailed to you, not a package you have to wait to receive in the mail. This is a link to a recording that you can watch on your computer anytime, on your iPhone or on your iPad, anytime during your lunch break, on the weekends, and it's yours for life. This is not something that is going to disintegrate after a couple of weeks. It's yours for life. So you can watch these, get a refresher course after a couple of months, and watch it as long as you'd like. One last thing I didn't mention is that once you purchase any of our methodologies, you're also a lifelong student of mine. So you also have access to my personal email address. You can contact me whenever you like. And so you can contact me if you have any questions regarding this or any of our other strategies, and I will get back to you as soon as possible, okay? So once again, this works on bonds, it works on stocks, it works on futures, it works on currency pairs, it works in 10-minute time frames, tick charts, weekly charts, monthly charts, daily charts. It works in any market, any time frame, but I'm not telling you that every trade is going to be a winner. That would be silly for me to tell you that. It has a very high level rate of consistency. Trust me, these three components, along with strategy 1, strategy 4, these are the things I personally trade myself. These are things that have sustained me so that I will be able to trade for 4 years. But along with that, you have someone with nearly 40 years of experience as your personal mentor. So please take advantage of this great discounted offer, $37 as it lasts for the next couple of days, and come on board as a member of Specialist Trading. In closing, I want to thank you so much for attending today. I hope you got something out of this. I hope you can start applying these three main components, and I look forward to all of you becoming students of mine at Specialist Trading. Thank you so much for attending. I'll see you next time. Bye-bye.